In this video, guys, we're going to talk about should you trade the Dow or the S&P 500? Stay tuned. Hey traders, a very warm welcome to you. Okay, so you've decided you want to trade the US hours, something in the US hours. Do you trade the Dow? Do you trade the S&P 500, NASDAQ, Russell, whatever it is? So I'm going to compare today the Dow versus the S&P 500. Now, this is not if you're going direct to the market. If you go direct to the market, you're trading the futures. This might be slightly different. What I've done is I've taken a broker, Intertrader, which is one of the brokers that we really like on this channel. And I've combined or compared, should I say, the spread, the margin, the hours of trade, and the average true range. In other words, how much they move in the day. So we can compare the two. And even though they're open during similar times, which one is best to trade for which style of trader you are. Okay, so let's start off with the spread. Big important thing for us if we're trading, especially if we're day trading. Not so important if we're trading kind of swing trading. The longer hold period, the less meaningful the spread is. But if you're more of an active trader, you know, the spread does add up. So let's have a look. So we've got here the Dow. The spread goes from 1.6 to 5.8, and the S&P 500 goes from 0.4 to 0.9. Let's explain what that means and what kind of hours we've got. So Dow, between the hours of 8 o'clock and 4:30, these are UK times, by the way. So that's 8 o'clock till 2:30, 14:30 to 2:30. That's the kind of morning session when the Europe is open. DAX and the FTSE open at 8 o'clock UK time. 2:30, the US market opens. So between that sort of morning session, the spread on the Dow is 2.5 points. So reasonably tight, but not the tightest possible you can get. When it opens, when the actual cash market opens at 2:30 and until 9 o'clock, that's when the actual stocks, the underlying stocks are trading, the Dow stocks are trading, what the constituents that make up that index. Then your spread goes down to the narrowest possible 1.6, which is pretty good and pretty low considering you know, everything that you get. If you went direct to the exchange, you'd pay 1 point spread plus your exchange fees and your commissions if you're trading the futures directly on the exchange. So you're pretty good being able to do this. And obviously the facility you've got with a broker like Intertrader is you can have to trade the full size futures contract. You can trade right down to whatever size you want, which allows you to scale in, scale out, you know, very, very handy. All right, so then after 9 o'clock, 9:15 we get the futures, kind of the little settlement time. So from 9:15 till 9:30 it goes to 5.8 points, and then it looks like, actually I've put 24 hours on here, but there's small 15-minute windows where the Dow is closed, and that's very common actually, just the settlement period. So between 9 and 9:15 it's closed, and then between 9:30 and 10 it's closed. But it's just a very, very small window. Most of it's, for all intents and purposes, it's 24 hours. However, one thing to note, guys, is that the spread does increase to 5.8 from kind of 9:15 to 9:30, then from 10 o'clock till 11, and then it goes down a little bit more overnight. So from 11 till the morning, it's 3.8 points. But 5.8 points is pretty. You got to be careful with that, because you're trading in that time zone when it's not moving that much. And you're paying 5.8 points, that's a lot extra to pay. So be mindful. However, it does give you the facility to open and close a trade that close a trade you're already in if you want to, or open something that's very, very key and very, very useful, or very, very reactive to some sort of news. At least you've got that facility there. It's not closed, but you just be mindful that 5.8 points isn't, it isn't 1.6, obviously. Okay, let's have a look at the S&P 500, or the US 500 as they call it. Spreads range from 0.4 to 0.9. Similar kind of structure here. The tightest spreads are from the US cash session open, so 2:30 to 9 o'clock UK time. And then what else have we got here? We have, from that 9 o'clock period, so 9:15 to 9:30 period, it goes to 0.9, and there's the same up until 11 o'clock as well, with that half an hour break period. So 0.9 points then, and then over the night, so between the night all the way around to the 2:30 open, it's 0.6. So it tightens up a little bit, but it's still, reasonably wide. Now, let's just skip in a moment. Let's go to the margin first. Margin 0.5%, so it's pretty good. You can basically operate a massive amount of notional volume with not much money. Hours, as I say, it's a little bit different. And actually the US 500, which is the S&P 500, is closed between 11 o'clock and 2:30. So if you're trading the S&P 500 and you're an intratrader, if you want to do some hedging, you want to kind of hedge your position, maybe you need to go to the Dow to do a pair trade on that. So you've still got options. Doesn't mean you can't, get exposure to the US, but if you've got a trade on, then you're not going to be able to get out of it during that time period unless they've changed it. It might change it, or they might adjust it depending on when you're watching this video. But it's worth noting. Now that can be a benefit or it can be a hindrance. You've got to look at it in two different ways. It's a benefit in the fact that if you've got to stop and the market goes up in the middle of the night because of the Hang Seng or the Nikkei or whatever, and then takes you out, but then it comes back down to open, you've been taken out just with that. However, you could look at it as a benefit and say, well, actually, if the market moves up and Japan goes crazy overnight or Asia goes crazy overnight, but we stand up where we were, I'm not going to get stopped out. There's a yin and yang to that, or, the negative could be, it goes way through and you get stopped out and some slippage. So, you can weigh that up, but of course you can hedge yourself on the Dow or something else that is open and give yourself an almost market neutral position if you needed to manage the risk in that way. All right, let's have a look at the average true range of these markets. So the average true range of the Dow is about 175 points as I'm recording this. The average true range of the S&P 500 is about 16 points. Now, this is where kind of, things get a little bit different because this is 0.4 when you compare it to kind of a 16-point move. You would say, well, if that was 160 points, we'd be a 4-point spread. So it's not that competitive when you compare it to the Dow, which is a 1.6 point spread, the same order of magnitude, 175 points. You can see the percentage of the spread compared to the average true range is way more competitive on the Dow. You're paying a lot more to trade the S&P 500. However, the S&P 500 is very much, it trades in 0.25 increments, and 4 of those will make up 1 point. So you've kind of got less than 2 tick spread on that. And if you look at the Dow as well, you've got just a much less than 2 tick spread on that. So there's one way of looking at it as well. But the interesting thing with the S&P 500 is, compared to the Dow, it's very much more of a steady, it's much thicker. If you look at the underlying market, there's much more liquidity at each level. So when it breaks through key levels, it tends not to, and I'm saying tends not to because of course anything can happen, tends not to kind of flush in extremes to the high or flush in extremes to the low. It tends to go through by a few ticks if it's not breaking out and then reverse or pull back. So, if you've got a stop level, you're less likely to be taken out on noise with the S&P 500 as you are with the Dow. Now the Dow isn't quite as volatile as an extreme as say the DAX, for example, even though there's a decent ATR on it. It's a bit higher price than the DAX, and obviously the price differential between these two. But the point is when you go through support level or resistance level or key level on the Dow compared to the S&P, you'll often get a bit more of a flush. So whilst the S&P can flush, and if you're watching the bear market, boy, this thing can flush, believe me, but the Dow still on day-to-day levels, when it's going through a key level, it could spit through 10, 15, 20 points and reverse, whereas the S&P might just go through kind of a couple of ticks and then reverse, just because of the liquidity at each level. If someone's hitting market orders, seller orders, and there's liquidity there to soak it up, it will only take a few price levels. Whereas if the liquidity is kind of drying up, which it does a little bit on the Dow because of the nature of the contract and the nature of the participants, often you'll get several price levels taken before it pings back. So it's something to bear in mind. So if you're looking for sort of action and a much more kind of bang for your buck in terms of spread versus range and movements and swings, Dow's the one to look at. If you prefer much more steady, methodical, kind of not necessarily extreme stretching, then the S&P 500 I would suggest is a slightly better option for you. But both were kind of good things to trade. Obviously, the best time to trade if you're a day trader is between that 2:30 to 9 o'clock UK time period, because the spreads are nice and tight, liquidity's tight, volatility's there. Being very cautious if you start to trade it overnight. Obviously, S&P's closed very, very overnight, but if you're trading the Dow overnight, 5.8 points, obviously if you want to have a position on, fine, but probably not to be going in and out, because 10 trades and you've knocked up a pretty hefty spread bill. So, all right, guys, that's the Dow versus the S&P 500, two different markets, even though they're in the US. Similarities and differences. Hopefully that's giving you some sort of guide as to maybe where you want to kind of start looking at and go and focus on one and see if you can develop a strategy to trade that. If you're trading one or the other already, maybe you want to kind of add one of these to your trading arsenal or strategy. All right, guys, stay tuned for the next video. I shall see you in the next one. Keep the risk managed. Take care. Goodbye.